Good day, all. Ira Epstein with your SPDR ETF stock market wrap-up, and this wrap-up is for the evening of Thursday, the 18th of January, 2024. Simply put, an interesting day. We're still getting a lot of consolidation. That's the first thing. I was hoping the markets would give us more of a break coming into the new year, but it's not. Interest rates are climbing, not impacting the market. The skirmishes are going on, if you want to call it that, in the Mideast are continuing and escalating. We, on Wednesday, saw Iran attack groups in Pakistan, and Pakistan responded with their tit for tat by going in and attacking today groups in Iran. All right, the next thing we see is that the U.S. and the Houthis are definitely continuing theirs. We took out 14 missiles supposedly yesterday, and we apologize to them every time we attack. We go, we don't want to start a war with you. You just got to stop whatever you're doing. Number one, we don't owe apologies. We're the United States of America defending free shipping. Why is that an apology? All right, I'll never understand this. Just all you got to do is say, we will stop these attacks if you stop. That makes more sense to me. Israel continues on, and today said no, they don't want a Palestinian state next to them. Maybe they don't have the right to make that determination. Maybe we should remind them of how Israel got founded and how it got put together at the end of World War II. And at some point, this has to have a beginning, a middle, and an end. That is the point that I think the world is saying to Israel at this point. But we're about stocks, we're about ETFs, we're about spiders. So where are we on all those? Wouldn't you think all that I just talked about would give you a fear syndrome? Gold should be going up, oil should be going up. You don't have that. Not at all. That's the first confusion. You would think the stock market would get nervous when it saw today unemployment numbers, or I should say jobless claims, that's what I meant to say, that were, 187,000? This is approaching lows made back in 2022, not last year of 2023, 2022. You're losing even continuing claims. So as this all comes together, it's a real problem for the marketplace, and it rallied instead. Confusion. When you look at Interactive Broker, that crazy action yesterday, the market held back on the gains that it made back. So an event, yeah, did it do a lot of damage on the chart? Well, most certainly did. You got a lower low and a higher high. I think traders will just scratch their head for a long time. But it told you something. And that is that there's big support at the 18 to the 100-day average of closes. And I think the traders will remember this, and they'll mark it on their charts, that until that's taken out, you probably have more upside bias here than anything. Schwab wishes they had the numbers that the Interactive Broker had. Where did the market stop? You look at that upper Bollinger Band, you rallied right to it, and you stopped. I talk about this all the time, and I try to teach with it. Next, we take a look at what the market's doing in momentum. It's terribly overbought. Overbought doesn't excite me. Before I go on to the next series of charts, I want to remind you, my sale ends today, January 18th, Thursday, Central Time at midnight. So come 12:01, you won't be able to get the advantage. I priced coffees in my local zip code in Chicago on January 11th, and I fit my prices in. That coffee's out of you in 6 to 8 hours, max. This is going to stay with you 22 days minimum. You can cancel whenever you want. You can come back whenever you want. I've never done this, so this is half price on my introductory offer, and it's over now. We had very good success with it. I appreciate you all coming in, but if you haven't come in, all you need to do is go to iraepstein.com under the word research or move your clicker up here. It's a great way to come in. Think of the cost of this, all right? 22 days. What is the cost per day that you're looking at? 22 divided by $4 divided by 22. You're not very much money. I mean, each week's running you 25 cents a time, roughly, okay? It's not very much money. Take a look. See if it fits in what you want. See if you get a trading idea or two out of it. Remember, it includes my morning subscriber videos. It includes the weekend charts where you're looking at the longer term weekly charts, special reports that I put out, all this included in that. Hope to see you there. All right. So let's now take a look at the very next chart that we have. And this one's going to be for uranium. So uranium had a heck of a run-up. It's due for a pullback. I'm going to look for support to show itself at the 18-day average at 44.61. You had an outside day down today. It's a pause in a market that's otherwise bullish is how I'm reading the chart, looking for support here and working off an overbought condition. In the gasoline fund, I'd be very careful. Here's what's going on. You've developed total sideways action in the market. We had a downtrend. It went into October, and then the market, instead of going up or down, actually, if I step back here, decided to go sideways, and it's basically stayed that way, going just back and forth in the bands and chopping traders up. As they think the market will take off to the upside, it fails, pulls back to the band. If they think it's crashing down, it gets to the Bollinger Band, comes back to the 18-day average, and now you've got your resistance up here. It's just one of those back and forth markets that became difficult to trade. It happens from time to time. I'm looking at the financial services, and now they've hit my zones of support. If short, this is where I would be telling you, if you were short, to come out. The market's also gone into a sideways pattern. This is a theme that we're seeing right now. I won't call a sideways pattern the industrial sector, but did anybody look at today's industrial numbers? They're terrible. I mean, we don't see U.S. industry really picking up. Service sector, yes, but not industry. And you have a pattern of a higher high and lower and low that's oversold. It's a very difficult chart to get involved in. AMC is just locked into a bear chart, and until this number gets over 21 on good rallies, I think the markets are going to continue to get sold. In RSPD, which is the S&P Equal Weight Consumer Discretionary ETF, we have a trend that is down, but it's hit its downside target, the Bollinger Band, and in the process got oversold. It's not sideways action. It is a market that tried that and it bent down. I still think the market's got a problem, but should you deploy? New money is what you have to ask yourself in an oversold condition. I teach not to do that. In the home builders, well, I think this is going to be in pretty good shape. We saw mortgages fall to a 7-month low today, according to Freddie Mac. I think they're 6.6% roughly. We have pent-up demand. Tomorrow you're going to get existing home sales. That's not home builders numbers. That's existing. And the home builders, we saw today permits, and we come in stronger than thought. And while we looked for a decline in new home building starts, it was half the amount the market was looking for. And who starts new homes in December, at Christmas time? You wait until after that. So I get that they were looking for that decline. When you take a look at the energy sector, Spider, look at how it just keeps falling. Market's just very bearish. Is it going to embed? Embedding means that you get the numbers 3 times under 20. Day 1, let's call it today. Day 2, yesterday. Day 3, the day before. You got it. So Tuesday, first trading day of the week. Wednesday, Thursday. So on a good bounce, if the market just lifts out of here, I think the traders are going to go short, looking for a retest of that low. In gold, you would think with everything I just said about the Mideast that gold would go up. You're caught in no man's land. You're just drifting here. And if you're looking for big breakouts, you're getting thrown back. It hits the upper band, comes back to the lower band in time, and generally these buys and sells are not giving you good entry spots, by the way, and it's holding that. It's just sideways, not going anywhere. SLV, still a market void of a trend, trying to develop a bearish reading, doesn't have it. A lot of resistance now at the 18 and the 100-day average. You could get a bearish crossover that would be very bearish. Why? Then you'd have the 18-day average under the 100. So you'd have the shortest moving average underneath the medium term, the 100. The 100's already under the 200. Not a good play. Copper. Dr. Copper, and that's what this is, copper's called Dr. Copper, is leading you and telling you industry's in terrible shape. It just keeps coming down here, and that's what you're looking at. China not in good shape. Industrial production in the U.S., if you saw today's numbers, not in good shape either. Then we get to interest rates. So BND coming down, and why not? This and TLT should. We got interest rates going up. You're back up to 4.14 in the 10-year note. I mean, it's come back. Remember, we were just under 4%. Now you're getting that climb again, and yet the stock market stays up. That's the hard part for me to figure out there. In the dollar index, you're fighting at the upper band and you're overbought, which means FXE is fighting at the lower band and doing basically the same thing. So again, friends, if you want to take advantage, get 30 days of my access. And as I said, you're in the neighborhood of 20 cents a day to get this. I think you can afford that if you want it. All right. All you need to do is go to iraepstein.com and sign up. You can move your cursor up here. You're not committed for any time length. You can go into your member login area and you adjust your subscription the way you want. Most people stay. I'm Ira. You take care.